Welcome back.
Yell or microphone?
You want to use this one? Here. Use it. You can use this. Huh? You can use this one. All right. Thanks.
Microphone. My talk has evolved. I'm not here to try to sell Malta as a jurisdiction. I was initially going to talk about 7 pillars of investing in ICOs, but then this morning in the shower I realized there's a much better topic here. As I mentioned during the panel discussion, I've been running crypto hedge funds longer than anybody else in the world, period. And I've been looking a lot at jurisdictions. I've also been traveling a lot around Europe for the last month. And about 3-4 days ago, someone asked me a question about jurisdictions, and I suddenly just had a eureka moment burst forth, and I realized how to analyze what countries are doing with respect to the crypto space. Because I said during the panel discussion, it's not static, nor can you expect it to be static. Countries don't immediately react to anything. Right? Countries take time to figure things out, and countries react in a different way. Countries have a personality. Countries have a risk profile. And then suddenly, this diagram popped into my head while I was taking a shower, which is the only time I do any real thinking. Here you have time, cleverly. And here you have, I'm going to call it emotion. It's not exactly emotion because it's countries involved. We can call it, if you'd like, intensity. Intensity of their behavior and their reaction. And this is, I don't know, can you even see this? This particular marker is so faded. Try it again. All right, here we go. So again, this is time and this is intensity. So there are roughly 5 phases that virtually every country on the planet Earth has gone through or is going through with respect to crypto. And there are a couple of exceptions, we'll talk about that. The first phase is ignore it. And that phase lasted in most countries until about 18 months ago. It was not the case with China because suddenly crypto had such a large footprint in China versus most other countries. So the timing here is slightly variable. The second phase, and I'll make it a little bit melodramatic, but not terribly, and that is panic. Countries don't know what to do, but there's all this money that's suddenly being sucked into this black hole called crypto, or these multiple little black holes called ICOs, and they don't know what to do. They panic. So what does a country do when it doesn't understand something and doesn't like what is going on with respect to that particular something? Any ideas, contributions from the general public?
Makes it illegal.
Yes, thank you. It makes it illegal. You can't do that no more. Whether that's driving an autonomous vehicle, and by the way, this diagram I realized works for any new technology that has significant risks, whether they be financial, such as crypto, or to life and limb, such as autonomous vehicles. You have one accident, it's illegal, stop. Right? One fraud, it's illegal, stop. It's the reaction of any bureaucracy to anything that it doesn't like. Then we get to another interesting phase, which in this case is understanding. The government starts to figure out what's really going on. In this case, it was a bunch of crypto guys that started being advisors, such as Abdallah, to fiat governments, right? Fiat meaning, in this case, not the company in Torino, but anything that is, not just money, by the way, anything that is done by government order. So, after they made it illegal, to varying degrees, because it's hard to make something illegal when you really don't understand it, governments start to get advice from other folks and start to understand what's going on. So, you have things like the Bitfinex hack, where you had, what at the time was about $36 million worth of Bitcoin stolen. Now it's a heck of a lot more. And Bitfinex come out with something, with another token that, RRS, recovery rights, that will have value provided Bitfinex ever gets those tokens back. Now, this is fascinating. There was a theft. It is now one of the larger thefts in the history of the human race. And we know exactly where the stolen goods are. They're in a wallet on a blockchain. Anyone who has 3 seconds to do a search can find exactly where the stolen goods are. And they ain't moved. Which is also interesting, because there are not many places where there's been a crime, a theft, you know where the stolen goods are, and there's not a bloody thing you can do about it. Because they're all in that wallet. Now, no one will deal with that wallet. Question where you could take that wallet and sell it to somebody for, on a flash drive, because contrary to what many people think, far from all crypto transactions are recorded on the blockchain. So when you look at that situation, you see, hey, wait a minute, there are actually advantages from strictly, say, a law enforcement point of view to crypto. Is BTC, is Bitcoin anonymous? Hell no. Wonderful University of Manchester study that just matched up URLs to wallets, and in over 70% of cases was able to specifically identify the person behind it. So you have Zcash, so you have Monero, or Darkcoin, or whatever you want to call it this week as branding suddenly hits the naming of cryptocurrencies. So that understanding comes by, and people start to realize, governments start to realize, hey, this isn't so bad. And about this time, there's an interesting bifurcation that happens. We go 2 different ways. First, we go to the blockchain. Then we go to cryptocurrencies. To explain this, let's go back to the meaning of token, right? Token is just a little round imitation of a coin. It can be made of wood. It can be made of metal. Everyone uses tokens from subways, from underground systems to amusement parks. Although now they've been replaced, they've been upgraded and replaced as well. Go back to token ring, Ethernet, bunch of computers connected on a wire. They have to identify each other. They have to send data around. They send data in a little packet. The folks who designed that system decided to call that little packet a token. That's where the word token comes from in this case. A token is simply an information packet. Tokenizing a lot of things. You want to get excited, look at blockchain on the delivery chain, right? Blockchain on the supply chain. Fabulous stuff, which is why Maersk has an $800 million project going on right now to blockchain its shipping records. Fantastic use case. Tokenized. Totally tokenized. You need tokens to run the blockchain. You don't need cryptocurrencies, a term I hate, crypto assets. You don't need crypto assets to run a project on the blockchain. On the other hand, you do need a blockchain for any crypto assets. People can tokenize many things. In fact, it's harder to list businesses that won't be revolutionized by the blockchain and tokenization than it is to list those that will be. Take the NASDAQ. It's tokenizing settlement, right? Because T2, T3, trading settlement in 2 days, trading settlement in 3 days, that's a long time. You can trade very quickly, but you can't get your money back until the settlement has taken place. It is not marketing its token. That token has no value. There are no price drivers for that token. T0 is trying to market its token, which is why it's also turned into one of the longest and least successful tokens in history, notwithstanding the term sheet that was just signed. So the understanding comes, and suddenly governments realize, this isn't such a bad idea. We could put election results on the blockchain. We could vote on the blockchain. You have an idea I came up with this, just brainstorming with a large law firm in Switzerland a week and a half ago, BBID, biological blockchain identification. So you walk into a store, you pick up the goods you want, and you walk out. You're identified on the way in, the goods are scanned as you go by. Maybe it needs RFID, maybe it doesn't. Revolutionizes shopping. You don't ever need to do anything. That's assuming you want to go in and physically pick it up, which is a whole different question. So understanding starts to come by, and then what do you get? You get the holy grail of this conference, which is regulation. These are the 5 phases that governments go through. Now, if you take a look, here's some examples. China, as I mentioned earlier, they ignored it for a little while. There was so much activity in the crypto space, so when a subsidiary of China Telecom and a subsidiary of Alibaba, these are misreported in a lot of cases, as are the 2 principals, but they were in each case subsidiaries, decided to accept Bitcoin. Bitcoin goes nuts. Bitcoin, not crypto specifically. So PBOC, the People's Bank of China, goes through a dozen iterations of ways to prevent people from having any freaking thing to do with crypto, and basically succeeds in China. Of course, regulations that prohibit something only affect 3 categories of people: the poor, the lazy, and the ignorant. Everyone else can get around regulations, as everyone in China has done. Nevertheless, the percentage of Bitcoin sales went from a peak of 99% in yuan to currently 1% in yuan, because nobody can use renminbi to buy cryptocurrencies anymore. It went through that panic phase. It made it illegal. And China, it's actually a lot further than it would give on, but China's now well into the understanding phase, and there are almost certainly, maybe before the end of this year, China will come out with regulations, and you'll start to see crypto officially increase in China, although unofficially it's never really decreased. Take a look at the United States. Panic is a bit overstated here. Let's call it concern. But it went from ignore it to concern it. Illegal. Jay Clayton in his pronouncements on I've never seen an ICO, I've never seen a token that's not a currency, or not a security, sorry. Understanding is starting to come there, and you'll see regulations. But in the US, regulations are probably 2 to 3 years out. Because one of the individuals here said, hey, we have laws on our books that can cover money handling and securities. Why do we need anything more? And to some extent, that's true from a very, very high altitude. But if you look at the evolution of what happens to the average token, which starts as a security and if it's successful doesn't end up as one, you're better off with a legal regime that is more specifically adapted to that situation. And you'll get that eventually in the United States, but it's a long way out. Malta is very interesting because Malta's one of the very few countries that basically did this. It never went through the panic illegal understanding phase. It went straight to the understanding phase. Here I'm going to diversify just a little bit, and I need a note here, because I was looking at this and I drew this, and I suddenly realized that this looked to me like the 5 stages of grief. Right? Denial. I had to look up. I remember some of these, but I don't remember them all in order. So denial, anger. So denial, ignore, okay, we're not too far away, right? Anger, panic, bargaining, make it illegal, depression, understanding, and acceptance, regulation. It doesn't match perfectly, I'm not saying it does. But just like the 5 stages of grief have different durations for different people, and some people will occasionally skip a phase, it's what you're seeing with countries right now. So different countries go through different phases in different periods of time and occasionally skip them. Japan, to me, is a fascinating example because Japan has had, in monetary terms and almost in absolute terms, more hacks than any country in the world. Yet, as far as I know, there's never been a serious proposal to make it illegal. So Japan did this. It's actually in this phase here. Japan went through that in a very interesting way considering the threats that were there. South Korea, fascinating example. South Korea goes through ignorance, clearly hits panic, and has a law about to go on its books that say dealing with crypto exchanges are going to be illegal. 200,000 Korean salarymen in 48 hours send a petition into the government saying don't do that. South Korea has more of its working class that owns crypto than any other country in the world. 55% of the people who earn a salary invest in crypto. So South Korea flipped completely, the fastest volte-face I've seen from any country in the crypto space. And now they blitzed through the understanding phase, and they've already put at least one regulation. There are a whole bunch more that are following behind it. We'll see what happens with how quickly it expands. But because it was so popular, the government literally could not take action against crypto. You can take any country in the world, and it fits with remarkable ease on this diagram. And I'm going to publish another article. I do a lot of that in CoinDesk on this shortly, because it's something worth analyzing when you take a look at where a country is here and where you want to put your crypto-based business of any sort. Again, I run a number of funds, and as a U.S. person, we are now getting excluded from more and more ICOs. A year ago, it was about 10% of ICOs. Right now, it's about 50%, 60%. This is anecdotal, not scientific. But I expect it to hit 80 or 90%, because unless you can fall under a security definition or exemption in the U.S., and if you fall under a definition, you're going to have to jump through a lot more hoops, why bother? The United States now is about 24% of GDP on a PPP basis. On a purchasing power parity basis, it's about 13%. There's a lot more money outside the United States. You don't pay the high price you did at the end of World War II, when the U.S. represented 40% of GDP and everybody else was basically poor. Can you shut that door, please? Thank you. Whenever everybody else was basically poor and the only risk capital you had was in the U.S., we're in a very different situation now. There's a lot of risk capital around the world, so people are ignoring the U.S. And as someone mentioned on the panel, there's a lot of forum shopping going on now. It used to be you want to go to a different court to find laws for your jurisdiction, good laws for your case. Now people go from country to country, particularly with globalization, particularly with the internet, particularly with the international teams that you find on ICOs in particular. Everyone just decides to pick whatever's the best country. And right now, it clearly looks to be here. We'll see whether that lasts. I think it has a good chance of lasting here. But again, my motto in this space, jurisdictional diversification. With that, any questions? Sir. I'll repeat your question.
We've actually spoken about this too, which is the government thing. I think that the U.S. is going to be a little bit faster because I'm working pretty actively there with FINRA and SEC and everything. But
FINRA, SEC, IRS, CFTC.
Right.
What is it? What is crypto in the United States? Right? Is it property, security, commodity?
Right. I think that they don't. I think they're starting to understand the evolution of a token, that eventually it's not a security any longer.
Wait. No, I categorically disagree. Get Jay Clayton in this room and let's talk about it. Ain't happening.
Okay, so of course he's not saying that, but they are getting there, just as an FYI. Now that said, I am actually doing a kind of utility token for one of my partners, firms, which is it's a SaaS platform for investment banks to actually issue the STOs, but the utility token will be in Malta. And the reason why, okay. And the main reason why is because the utility token is a true kind of utility which has to be used for the commission basis to trade and to route orders. We're all exchange guys that are building it. And what's really interesting is we're using Malta.
Wait. Stop. You're supposed to be asking me a question, not explaining what your project is,
so,
dude.
That said, because you know what, it's complicated. So I just wanted to make sure.
Well, maybe we should put it to the side because there are a lot of other people who want questions.
So my main question is, when do you think we're going to see the kind of ability for a global type of approach to routing, trading, and like right now we have a lot of...
Let's stop. That's a good question. When are we going to see global intercompatibility? Answer, never. In the fiat space, you do not see it. The fiat financial space has been around since the East India Company first issued stock in the 16th century. It is not going to happen. Let's take some statistics. The better you understand the fiat space and fiat financial history, the better off you are. How many currencies were in the United States before 1863? 8,000. That is the Smithsonian Institute that gives that answer, not me. 1863, Lincoln passes a law saying there's only going to be $1 in the North at worst because we're in a fight with the South. And so the U.S. dollar dates from 1865. If you look at Switzerland, if you look at Germany in particular, had hundreds of currencies. How many fiat exchanges are there today? There are over 1,000 fiat exchanges because you're looking at stocks, bonds, commodities, FX. How many exchanges are in any given country? Depends on the size of the country. Look at the United States. There used to be hundreds in the U.S. alone. There are still dozens. There is absolutely no unity of structure, regulation, procedures, or reporting in any major financial market in the world, and there is, God knows, absolutely no unity of regulation. That includes the FX market, although that's the one that's actually the closest. So when is crypto going to have that? Never. Fiat doesn't have it. And it's not in the interest of every government authority to have unified regulation because they want to fight for business. Governments fight for business just like business does. Why do you think we're in Malta today?
I would agree with that. The one thing I wanted to comment on, though, was the oft-heard Jay Clayton. And I think, by the way, and I've said this when I've spoken at other events, so I might as well say it at my own, I think the SEC has been horrifically irresponsible in not doing what they do in every other industry, which is to go have public hearings and then have proposed rules and then have more public hearings and then have final rules. If you look at the SEC.gov, under proposed rules, under public hearings, you'll see nothing on crypto because there's been nothing. It's been different commissioners of the SEC, and not that long after Jay Clayton said that, you had another commissioner, Wendy, I forget her last name now, who basically said, no, I'm looking more at not having a sandbox approach, but having a lifeguard approach. And so they're telling stories because they want to keep kicking this down the curb, and they think by being unclear, they're scaring the bad guys, when instead the bad guys never get scared. They just adapt. The good guys are the ones who are now doing things like saying, well, I know I have a utility token, but my lawyer said I'm going to go to jail, so even though I'm not giving him any equity, I'm going to spend a lot of money, even though I'm never going to file an earnings report because I'm not a security, but I'm going to do this, and now I won't be able to.
We're going way down the U.S. rabbit hole.
I understand. I just wanted to make one point about Clayton, and that is that quote. So one of my clients that I've worked with from the beginning is the Chamber of Digital Commerce. Perry M. Boring sat down with Clayton and said, so tell me how many ICOs you actually have looked at to make that statement. And he said, only the ones that have been brought to me for enforcement actions. That's like saying that every black person or Mexican that I've met is a criminal because the only place I've looked is in jail. So
let's break this down in one way, but let's also make it more universal because this conference isn't about law in the United States. One of the interesting things that happens in most countries, particularly OECD countries, including every member of the EU, I'm pretty sure, is that you have a legislative branch and you have an executive branch, right? And the executive branch is responsible for enforcing laws. The legislative branch is responsible for enabling laws. So what you're seeing now where you have difficulties, including in the United States, is where you have the executive branch enforcing the laws. The executive branch, however, is responsible for interpreting, but it's not responsible for creating new laws. That's going to take a while because that's going to be done in the United States through Congress, and that's going to take a long period of time. I stand by my 2 to 3 years, but heck, who knows, right? In Malta, there are 400,000 people on Malta. It has, I think, 65 people in its parliament, which really strikes me as a lot of people for 400 grand, but it ain't my decision. Malta is a relatively small country in terms of population and certainly in terms of geography. It actually functions very well together. Anybody know when the first human remains, or how old the first human remains on Malta are? It's fascinating. The history of the island is fascinating. I encourage you to look at it. 7,400 years ago, that's the date of the first human remains on Malta. People have been parked on this small island for a long time. They work very, very well, remarkably well together. Look at what was it, 1565, when Suleiman the Magnificent tried to throw the Order of St. John's out of here, just like he did out of Rhodes when he was a young man. And the Siege of Malta is a wonderful story. The Germans tried to do it for 2 years, 3,000 bombing raids. I don't mean aircraft, I mean full raids over 2 years, and they were never able to take the island. Churchill called it the Unsinkable aircraft carrier because if you look at the Mediterranean, it's two pieces, one off center from the other, and Malta controls the access between the two. An amazing island. If you look at the history, you understand why the people here work so well together. While it's so nimble, why it is so cooperative, why you have somebody like Abdallah here who could find a job at any bank in any other country in the world, and he decides to spend his time on Malta. Amazing place, fascinating place, nimble place, works very well together. So then it's one of the nicest things you could say about a government that runs efficiently. I mean, it's got its issues like everybody else, but it's way ahead of the world right now in the crypto space because why? The legislative branch works well with the executive branch. If you look into the history here, most people a month ago did not expect these three most recent laws, right? Laws number 4, 5, and 6 passed in Malta, to be signed into law until September. I spoke with a lot of people here 3 weeks ago, and that's what they expected. Suddenly, they were signed much more quickly than initially expected. That is an amazing development. It's only possible in a country where people cooperate and where they work well together, such as in Malta. The United States, it's an entirely different, 300 million people, it's a harder thing to run. As Charles de Gaulle said about the French, how can you possibly control people who have 400 kinds of cheese? Any other questions? Là, on va discuter, pardon, après.
Une autre question aussi, over here.
Oh, I'm John Christmas from Directors Chambers. You mentioned an aspiration to create a Sharia-compliant fund, and I'm wondering, in the whole world, are there particular domiciles already where they have the framework for setting up a cryptocurrency fund which would be recognized as Sharia-compliant? And do you think a country which is not Muslim could become a leader in this area? And what would we have to do to become that?
Okay, the answer to the first question is clearly no, because you have two different verticals. You have governments, and then you have Islam. Islam is fascinating because it doesn't have a pope. It actually doesn't have much of an official structure. It's an informal structure where imams, and I'm not Muslim, so if I get any of this wrong, please don't shoot me, but where the imams are just respected for being smart, right, good, whatever the heck, for having the right friends, I don't know. And so there can be no, well, actually there could be, but right now there is a big diversification between how a government is set up and what you need to do to be recognized by an Islamic Finance Council to be accepted as Sharia compliant. And just two very quick words on why, on my mistake and why I thought I knew where the difficulty was. The difficulty is not that you can't invest in interest, pork, pornography, weapons, gambling, and stuff like that. The issue is that cryptocurrency is not viewed as mal, M-A-L, which means something that has value. And that's the issue because crypto assets are just quite abstract and quite new, and the Islamic world is not known as the most progressive, so it is having greater difficulty than even the United States or China in terms of wrapping its arms around the crypto space. So it's an interesting conundrum. Your second question as to whether a government could ease the framework for a Sharia-compliant fund, it would depend completely on that government's relationship with Islam. Even if, say, Malta is not an Islamic country, if there were a respected, that's the key, Islamic Finance Council, and these are the imams who rule on whether a given financial product is Sharia-compliant or not. If it had a respected Islamic Finance Council here, or in London, which is where they all are, and worked with one, then the answer to your question would be yes. It's a possible thing to do. It's actually not that difficult, and I don't know any government is targeting that. In terms of Abu Dhabi and Dubai, which are the two, ADGM, the Abu Dhabi Global Market, Abu Dhabi actually has a decent crypto framework, and it's expanding it, not quite as quickly as Malta is, but it ain't bad. And DIFC, the Dubai International Financial Center, because Dubai is known as a center of finance. However, it's not passed really any crypto laws, certainly not like Abu Dhabi has. Interesting, ADGM and DIFC are both governed by English law, not by Shariat. So there are some interesting questions as to what would happen to a crypto fund there. I've got a couple of law firms working in both places trying to figure out which one would be better, and I've put that whole discussion, that whole analysis on hold for the moment because I've got another advisor now who works with Islamic finance councils. Because it turns out it's not the government that matters; it's the Islamic Finance Council that matters.
All right. Any final questions? Raise your hand. Nope. In that case, let's give Tim a big round of applause. Nicely done. All right, and Tim will be here over lunch, so if you have more questions, you can always ask him during lunch.